So in today's session, we're going to be learning how to identify the higher time frame direction. Okay, so knowing how price moves on the higher time frame. So on the higher time frame direction, we're going to use the daily and the weekly. Okay, so each time frame has its own direction. So the daily has its own direction and the weekly has its own direction. How's that? So the daily can be bullish and the weekly can be bearish. Now, when they are against each other, price is more likely to be kind of consolidating or not having as much explosive moves when they are aligned with each other. So when they are aligned with each other, like the daily and the weekly, you're going to see big moves like these. But when they are against each other, you're going to see some price action like this, even though this move, for example, has 500 pips, 300 pips here, okay? So that 300 pips move is enough. It's just that when they're aligned with each other, you're going to have a very big move like this one or that one. Okay, in today's session, we're going to be learning how to identify the current storyline, the higher time frame direction, and knowing your next target. So if you're looking to sell, where is your target and where to sell from? And if you're looking to buy, where is your target for the buys? Okay, even though when you don't have levels on the left for the buys, I can show you how to identify when the storyline is gonna stop at. Okay, so let's just do a quick recap of the last session. So in the last session, we learned the 5 types of SNR. We said that you're gonna focus on the closing price of the first candlestick of the pair you picked. So let's say these 2 candlesticks, right? You're gonna focus on the closing of the first one. You're gonna draw a line to the right. So you're gonna have the gap, the A level, and the V level. Okay, you have to identify if they are fresh. It depends on the price action they are tapped with. So if they are tapped with a body, it is fresh. If it's tapped with a wick, for example, right here, it is unfresh. Okay, so the second type, the third and the second type are the AMV. The fourth is the SBR and RBS. For example, you have an A level that gets broken. It was a resistance acting as a support again. This is the 4th level. And the 5th level that I got, guys, I gave you the homework for, so you fully master it, is the QM. So when you have an A level that is quite hidden before the bigger A level. Okay, so you're gonna have an A level that is behind a bigger A level. So an example right here. So you have a V level that is before a bigger V level than it. So it gets broken twice. So once here, twice there. So it becomes a QM in the future. Okay, so if the price ever comes back, it will act as a QM. Okay, so here I gave you, so the homework that I gave you, you guys I was impressed. You guys did good on the QM1. Okay, so on the swing points homework, there was some flaws. Okay, and the flaws were your eyes are not trained as much. So there are levels that started swing moves that you guys could not identify the levels for that. So I'm going to use Owanda today. Okay, the original broker that we use for our analysis is Pepperstone. Okay, it has very precise price action, but to avoid the confusion for you guys, like this gap right here or some stuff like that, we're just gonna use Owanda. Okay, so let's say, for example, let's take this buy right here. Okay, this buy right here. You have to identify the fresh level that started this buy. Some of you could get the level. Okay, very good job, but the others could not find where it started from. So what you're gonna do, you're gonna have I'm going to give you a tip, and this tip is going to help you identify the level, even if it is hidden in the back. Okay, so what you're going to do, you're going to grab a box. You're going to box the wicks of that swing move, and you're going to push it all the way to the left. Okay, all the way to the left. So, and in this box, you have to identify fresh levels that got rejected by these wicks. Okay, so on Wanda, it shows that we rejected this A level right here. Okay, so without doing this method, you could basically identify it. So on Pepperstone, it did not touch it, as you can see right here. On Pepperstone, it missed it. So it was quite hard to see the level that it reacted from. So what you want to do is you grab your box, you draw it to the left, and see if there are any fresh levels that we rejected in this area. So here you just keep going to the left, to the left, to the left until you see here we have an A level that got rejected and it became unfresh, and then it got broken again, so it became fresh again. And here we started our swing buy. Okay, this is how to identify the start, basically the levels that started the swing moves. Now, this is the same method or the same tip that you're going to be doing to identify the current storyline. So what you want to be doing is you go to the last finished formed candlestick. So here you have a candlestick on the daily that still has 1 hour and 50 minutes left. So you don't want to use that. You're going to go back one more candlestick to identify the storyline. And you mark the wicks of this candlestick. So you're going to mark the upper wick and you're going to mark the bottom wick of that. Okay, and then draw a box to the left and here also to the left. So here, do you have any levels that got touched by this wick or rejected by this wick? If yes, then keep it. If not, then just delete it. Okay, so here, do you have any fresh levels that got rejected to the left? Here, no as well. So if you don't have any on both wicks, you would want to go one more backwards. So you're going to go one more candlestick backwards. So here, I'm going to box to the left. Here, box to the left as well. Now, as you can see, the upper one did not reject anything, but the bottom one did reject this level. Now, why am I telling you about rejections? Because that's the first sign of identifying the storyline, if it is bullish or bearish. Okay, that's how you identify if the market is going for a bull move or a bearish move. So the rejection basically represents just 10% of the storyline. So you have a daily level. It doesn't matter if it is a gap, a QM, an A level, a V level, it doesn't matter. So for the sake of this example, let's just pretend it is a gap level, okay? So the first sign that represents 10%, it's a candlestick that simply has a wick on this. So this is a rejection. Having a rejection does not mean we're going to go lower, okay? We need one more sign, and that sign is going to be one time frame lower. So if the level is on the daily, you want to be going one time frame lower, which is the H4. Okay, now on the H4, you're going to be looking at something called the external breakout, and by that, if you have both these signs, you will confirm your direction. Very simple. Okay, it's the same for the weekly direction. You're going to have a weekly reject weekly, and then you're going to go look for the second sign on the daily. So here, do you have a daily reject daily? So as you can see, we have a V level right here, that got rejected by this daily wick. So what you want to do is separate the price action from this daily candle and from the previous daily candle here. So you want to put a horizontal line. So when you go to the H4, you're not going to be confused with the price action. So here we separated the previous daily candle and the actual daily candle that gave us the rejection. So right here, you look where we touched the daily. So as you can see, we opened the new daily candle here, and then this is the candlestick that touched it. Now the external breakout is something like this, which is the second sign of the storyline. You're gonna have price action on the H4. This is basically H4, okay? This is H4 approaching your daily. Right when it touches, you're gonna look at the last A level that got created before the touch. This is for buys, okay? This is when you're looking for buys. Now for sells, you're gonna be looking at the last V level that got created before the touch. So here, the last A level that got created before the touch. Now what I mean by the touch, it doesn't matter if it is a wick or a body, okay? If we have a wick right here, this is not external, it will become internal. So it will not count as the last A level that got created before the touch, and it will be this one. But if you don't have a wick, it's gonna be still this A level. Now what you're gonna be waiting is for this level to get broken on the same day of the rejection or one day later, okay? So the breakout is only valid for the current day of the rejection, which is right here, okay? The current day of the rejection, or the next one. That is it. If the level does not get broken by these 2 days, the third one on the third day it's invalid, just neglect it. Okay, so let's take a look at an example right here. So you have a daily V that got rejected right here, and then you go back to the H4, separate the current daily that rejected and the previous one. So this is where we touched it, as you can see. Now, where is the last A level that got created before the touch? It's right here. Now, did this level get broken in the same day of the daily rejection or in the next day? So here it got broken on the day after. As you can see here, we rejected on March 19th, and here we broke it on March 20th. So this is a valid breakout. Now, the external breakout is here. This is the internal breakout. Some of you would say, oh, yeah, we have a breakout here, but this one does not count because it is an A level that got created after the touch. So this one would not count. Okay, simple as that. So here we break it, and then we confirm that our storyline is bullish. Now, what does that mean? Our storyline is bullish. The first thing is that you're going to only look for buys, and the sells are going to be very high risk. So if you're ever going to take sells, you're going to be taking them with a very, very small risk, like 0.10 lots, 0.05 lots, okay? So if that's the first thing. The second thing is that, okay, I'm going to say it again, you're going to have to only take buys, focus on the buys. The third thing is that we're going to target the next fresh daily level, okay, the next fresh daily level. So if you have a daily here, you're going to have the H4 breakout as usual, and a daily rejection, and the daily rejection. So the next fresh daily is going to be here. That's our next target. So let's take 4 fresh levels. Okay, we have 4 fresh levels here. Which one is price going to stop at? Now, when price is here, you can't really know which one price is going to stop at, but you can have a higher probability level in here. Now, how to identify the higher probability level in here is by refining this daily upwards to the weekly. So you're going to have to look if any of these dailies are aligned with a weekly level or a monthly level. So let's say this is just a daily, this is just a daily, and this is a weekly level. Okay, this is also a weekly. So a weekly that is in the same place of the daily. That means this has higher chance of stopping the price than the other levels. But is that enough for you to say, oh, we're going to stop here 100%? No, you're going to have to wait for the other signs of the storyline, just like when it started. So here, you're going to have to wait for price to reject either this level or this level or this level or this level, and then give you the H4 breakout in order for you to say, oh, this is the level that stopped the bullish storyline. So if you have a rejection here, and then you have a bearish breakout, say here, you have a bearish breakout, okay, the bearish breakout, then this will count as a shift in storyline. So from bullish to bearish, and you would say this is the daily level that started the bearish storyline and stopped the bullish storyline. So here, I'm going to show you an example. Okay, where did this buy start from? This buy swing, this whole buy swing, where did it start from? So it started from this gap right here. This gap got used once, twice. This is the third time, and it is valid. So you have daily reject daily and H4 bearish breakout. Now, where is the last A level that got created before the touch? Now, the touch is right here. The last A level is right here. Did it get broken the same day? Yes, it did. So this is a valid shift in storyline. So we're going to be bullish. That's why price went up. Now, let's figure out why price here went a little bit down. So you're going to have fresh levels as a target. So here from daily fresh to the next fresh daily. Now, where is the next fresh daily? The next fresh daily is right here, and you're going to have one right here. You're going to have one right there. Okay, this is just an example. So this is not fresh, this is not fresh, this is not fresh. So you're going to be marking only the fresh ones. Which one is going to price? Which one is price going to stop at? Okay, you're going to have higher chance that it's going to stop at one of them that is aligned with the weekly. Now here, none of them aligns with the weekly. This daily doesn't align with the weekly. This daily doesn't align with the weekly. This daily doesn't align with the weekly. So Simply wait for a rejection on one of them and an H4 breakout. Now, do you have an do you have a rejection on one of them? Yes, we have two rejections. We have one right here and one right here. Did we reject this one? No. Okay. Now, why didn't this level hold all the way down? And why didn't this one also hold all the way down? So let's go and check the H4. Now, just separate the price action if it is basically confusing you. So just put a vertical line here. I'm going to go to the H4. Now, this is the last V level that got created before the touch. As you can see, the touch is right here. Last V level. Did we break it? No. That's why price failed to go lower. So it's going to keep going higher. Now, let's look at the higher example. Now, here we had a daily reject daily. This is the last V level that got created before the touch, and it got broken. So here we confirm that the storyline turned bearish, as you can see. So here, storyline turned bearish. Why didn't it hold that much? Simply because it found in another daily and did another daily reject daily H4 breakout. So here, after the breakout, price pulled back, went down, and found a daily level on the left. That is the target. So daily to daily to daily right here, and then to daily again. So that's what price did here. H4 breakout, pullback. You could have catched a sell into the next target, which is right here. So from this daily to the next fresh daily right here, do you have the same signs again? Yes. Daily reject daily. As you can see, this is the last A level that got created before the rejection. So H4 breakout the same day. That's why price did a pullback, buy. Okay, that's how to identify storyline. You have targets and you have basically all you need about the higher time frame direction. Now the same thing goes for the weekly. Okay, so the current storyline is bullish. It started from here, daily reject daily. Actually, it started way lower. Started from this gap that got used once, and the second time right here, daily reject daily, H4 breakout. It started right here, and then started on another time right here. Daily reject daily, H4 external breakout, pullback, entry. You always need a pullback after a normal breakout, external breakout, in order for you to catch a buy. Okay. Sometimes price just does a breakout and then goes up. I'll also show you in the next entry session how to catch the buys. Okay, when it does that, so simply breaks, goes up. There is a certain entry type for that. And most of the time, price just does pull back in order for you to get your buy setups, and then just goes all the way up. So yeah, the same thing goes for the weekly. What you want to do is you want to go to the weekly and do the same method. Basically mark the last wicks of the last finished formed candlestick until you find the level that it rejected. So here we have a weekly, reject weekly. Here it did not touch. Let's check the other broker. Okay, it also did not touch. So let's just go and find where it rejected. So here you have, I think, here we have a weekly reject weekly. As you can see, this is a weekly candlestick that rejected this gap on the weekly. You would want to go to the daily and find the last daily A level that got created before the touch. It needs to get broken the same week, okay? For the weekly storyline, it needs to get broken the same week. You're not going to be waiting for the next week, okay? It has to be the same week. So daily breakout, price pulled back a little bit and then went all the way up. Now here, the daily and the weekly are aligned with each other. That's why we had a very explosive move. Okay, guys? So here, sometimes price shifts to bearish on the daily, but look at the move. It's not as big as this one, simply because the weekly is still bullish. So weekly, okay, let me show you an example here. So this is weekly to weekly, right? Daily breakout. And then daily on the way up, it's going to find the daily level. That's going to give you a daily reject daily. And then H4 breakout, simply giving you a pullback, finding another level here, okay, on the daily, and then going up from it again. Okay, so that's how price moves. Now, what do you do when the weekly is bullish and the daily is bearish? You basically focus on the daily storyline, because the daily storyline has to complete before we complete our weekly. So if the daily is bearish, the weekly is bullish, you're going to be looking for sells short term. We're not going to be holding them for more than 300 pips or 400 pips. Okay, so when the daily is bearish, weekly is bullish, your TP is at 120 pips. Okay, we're going to talk about all the informations in our next session, which is all about the entries. Okay, now I'm going to read the chat. If you guys have any questions, please feel free to put them in the chat right now. Okay, daily can be used only 2 times and weekly 4 times. No, the daily and the weekly both can be used 4 times. The H4, the H1, 2 times. Daily, weekly, 4, H4 and lower 2 times. Yes, exactly. 4H. Okay. Can a storyline start without a rejection? Now, that's a very good question because it happened twice where it started without a rejection. Because as I said, guys, remember, the rejection only represents 10%, but sometimes, just sometimes, it rarely happens. The last time it happened, I remember it was right here. Okay, right here. I still remember the example because it rarely happens. If it happens all the time, I wouldn't remember this example. So what happened here is that we had a daily level. We had a daily level. Here it's not rejection. We did not reject it. Okay, we did not reject it. Now, as you can see, we had a daily touch. We did not reject it. But on the H4, we had an external breakout. We had an external breakout. And as you can see, here we touched, and the last level that got created before the touch right here got broken the same day or the day after. Now, this is valid for a storyline to turn bearish. As you can see, break, pull back. Here we went down and we got our sells. Okay, so yeah, it can happen where price just gives you an H4 breakout on a daily level. It has to be on a daily level, okay? It cannot give you an H4 breakout randomly because some people just go to the H4, oh, I have a breakout right here. I'm bearish, so I'm just gonna sell. No, that's not how it works. This H4 breakout has to be external on a certain daily level. That's how it should work always. What do we do when the price touched and rejected unfresh daily or weekly kilo? So you're not gonna look at the unfresh key levels at all. So yeah, is the kill zone again the only indicator you're using? We're gonna talk about the indicator. Yeah, it's the only indicator that I'm using, but we're gonna talk about it in future sessions, especially when we go to the Euro USD one. Thank you. So any other questions, guys? Please feel free to give me any questions. I love getting asked hard questions. Yes, if daily level rejected, let's say we started the bullish storyline from a gap, it can end on an A level, it can end on a QM, it can end on an RBS or SBR, it can end on a gap. It doesn't matter, okay? It doesn't matter the type of SNRs that we start from or end from. They're all valid for a storyline. If there is more than one rejection on a wick, which one we take as a touch? I don't understand that question, but yeah. So simply look at the first wick and then separate it from the previous candle and then just look for the H4 external breakout. For both daily and weekly storyline, we always rely on the previous candle that is ended day before week. Yeah, you simply look at the last candlestick that finished forming. So here you have the weekly. As you can see, we have 1 day left for it to form. So you're not going to do the method of this because price is still moving. It can go up, it can go down. It has to finish in order for you to use the box method, okay? Yes, I would exit my longs if I see that the shift in storyline happened from bullish to bearish. Yes, exactly. Now, I'm going to talk about when you have a bullish storyline that is going up, and then there are no levels to the left that price can react from. Now, what do you do in that case? So here you have price action, and you have levels. Here, one level, here, one level here. What do you do if price just goes up, and then here it's still bullish? Now we don't have any targets. What do we do? So what you do is that you wait for price to create a level here. create a level here itself. Create a level. No, it created an A level, then it can react to it. Okay, that's the only way that price can turn bearish again. So I'm gonna give you an example. Price was going up from down here, bullish storyline. Okay, bullish storyline again from here. Bullish storyline keeps going on. Now this is the last level that we had. Okay, this is the last level that we had that we could simply get a rejection from, but we just broke it. There is no level that we can basically reject and start the bearish storyline. Now, does that mean we're going to take an all-time high? Not yet. It has to keep going up unless it creates a new level, like here. Now, what it did is that it created two levels, one here, two here, and this one is still fresh. So you're going to be marking all of them. Now, price does what? It rejects the one on the left, and it gives you an H4 breakout down here. If you go check the H4, that means we're going to go down to the next daily or this daily or any of these dailies. Simply mark the H4 breakout alongside with the rejection. Here, as you can see, price broke these, so you're just going to keep selling. Here we had the rejection. Price kept going down simply because it didn't give an H4 breakout. Here we had a daily reject daily, H4 breakout, went to the next daily. Now from this daily to the next daily down there. Okay, so you can see price is traveling from a fresh level to another fresh level, from this fresh level to this fresh level to this fresh level. It's just a game from it's just a game of fresh levels to fresh levels on the higher time frame. That's how you identify the higher time frame direction. To indicate where the next daily may reject, we refine to weekly and then monthly as well, or just weekly. Yeah, you can refine it to daily, monthly, weekly, all the three time frames. So the only use of the monthly is the refinements. You're not going to use the monthly for the storyline. So monthly reject, monthly, weekly breakout. No, you're not going to do that. You're just going to look if, for example, this daily is, if this daily is aligning with a monthly. So here, as you can see, that daily is aligning with a monthly. So this level has a higher chance of stopping price or at least giving a bounce. It doesn't mean it has a high chance of starting a bullish storyline, but it has a high chance of at least giving a bounce. Okay, so daily plus weekly plus monthly, it's higher chance of it giving you a reaction. If price is consolidating going from daily level to another day level, would you wait for the H4? This might be too tight. Just sit and wait for a you're not gonna wait for consolidation to break. Just follow the last storyline. So if price is doing something like this, daily here, daily there, you have an H4 external breakout here and an H4 external breakout here. What do you do in this case? It's not consolidating here. Here it is bearish. So if price gives you H4 bullish breakout, now we're bullish. H4 bearish breakout, which one do you follow? This one or that one? You simply follow the last one. It's very simple. So this is bearish here. You're going to be taking sells until the next daily, okay? It's going to go to the next daily right here. Even though it looks like a consolidation, just focus on the fresh levels, okay? Trailing stop is crucial in that case. I don't understand that question. If external level broken within two candles, that means the breakout is valid. If it breaks on third candle, can we look at another entry, one time frame low? No. No. If it breaks on the third candle, you're not gonna validate the storyline, okay? So if you have a daily reject daily and the H4 breakout happens on the third day, it's not valid, okay? It's not valid. Now, as a start out, guys, start with Owanda for storyline and Pepperstone for entries. It's for our next session, the entries. Now, Owanda is very good and very clear, very simple to identify the H4 external breakouts, especially. Yeah, for you to not get confused, just use Owanda. So, any other questions, guys? Amazing. So, what I want you to do for the next homework is you see the homework, the second homework I gave you for marking the swing points that started the swing buys or swing sells. For example, you see this is the level that started the swing buy, or this is the V level here. That homework, I want you to go on it again and mark all the H4 external breakouts for these swing buys or swing sells. Now I'm going to give you an example here to understand, to see if you guys understood the external and the internal breakout, the difference between both. So here we have an A level that got rejected right here. Okay, it might not seem like a rejection here, but on Pepperstone it is a big ass rejection. So A level rejection here. You go to the H4. I always use this example because it's very clear and very trappy. Okay, so here, if you guys can annotate, where is the external breakout? Jackie, I got you, bro. That's wrong. This is not the external breakout. That is the external breakout. Now, why do you change it? It's okay if you're wrong. I'll just explain to you why this is wrong. So this is an internal breakout simply because it got created after the touch. Look at the touch. The touch is right here. You're not gonna look after the touch. Just delete this from your brain, okay? It's okay if you rush it. Now the wick, no, we're not gonna use wicks, just gonna use structure, okay? So look at the external, okay? Now, yeah, your homework is gonna be marking all the H4 external breakouts on the daily swing points. So see this sell, this buy, this sell, this buy, this buy. It's okay, bro. It's okay. We always rush it sometimes. So here, okay, just find where is the H4 external breakout and just send it to me and tag me in the Telegram group. For our next session, the entry session, we're gonna be I'm gonna try to have it earlier. So on 28th, we can start our Euro USD strategy mentorship. So it's not really there is not really a big difference between that and Malaysian MSNR that we're doing right now. So the Euro USD strategy is very good for prop firms. It has a higher win rate, higher RR, and yeah, I just use both styles, and both of them gives me good entries, same percentage, same return. So yeah, I just feel like I want to teach that. I don't want to keep all the secrets for myself. So no, I'm not gonna answer for the entries today. I'm just gonna talk about entries for the next session. I hope you guys have a happy day, a good night, a good morning, good evening. I don't know where you guys are in the world, so just have a good everything until I catch you up in the next one. Okay, guys, see you next time. Bye-bye. Gonna send you the recording in a bit.